All right, super happy and excited, as we've been mentioning, guys, to have Brian Shannon on the show this afternoon. This is the new book, and we're so happy to have him here to talk about not only the book, but also to talk us through how we should go about maybe integrating anchored VWAP into our trading. It's great to have you, Brian. Welcome.
Brendan, thanks for having me on. I've been a fan of your show, believe it or not, for quite a while. I too pop in here and there when I'm in the day trading mood. I'm more of a swing trader these days. I've been, kind of. I don't understand how Sean battles it out every single day the way he does for so long. But thanks for having me.
Yeah, we're happy to have you. Let's jump right into it because there's a ton to cover here, and I have to say, I got through the book on the weekend, Brian, and I mean, I guess the best way to sum it up is for anyone starting out or maybe someone who's, more experienced, there's so much in this book for any level of expertise. There's the basics, market structure, market fundamentals, volume, all the way through to the more advanced topics of how institutions are using VWAP, how institutions are executing using VWAP. So let's maybe start from a higher time frame here and a higher standpoint as the overall market is concerned, and we'll work our way down into more specific ideas. Give us your overview here. I mean, there's so much to talk about when it comes to what is affecting this market right now, but give us your overview here of the major indexes. I mean, the NASDAQ has been just so impressive all year long with tech leading, NVIDIA up 113%. It's insane with all of this AI talk. Give us your overview of the major indexes and how you've been looking at them using anchored VWAP.
Yeah, great. So a lot there. The NASDAQ, as you mentioned, has been just a great leader this year so far. We're getting overcooked to the upside here, and I think that maybe this is the beginning of a little bit deeper pullback, but still a solid uptrend on that daily time frame. You can't look at that and change your mind because of a couple days of pullback. We're still above a rising 20, 50, 100, 150, 200-day moving average. They're all rising in there. So, some deeper pullback in the NASDAQ wouldn't surprise me. The way I like to look at it is, anchor from these important lows like this one right here. Or can you see my screen, by the way? I can't see what you guys see. I'm not hearing anything. What happened?
You should be good.
Okay. So anyways, if we pull back down into this area, that's where we see the 20-day moving average and the anchor from this low right here. So, that would bring the NASDAQ down to 324. Another 2%. That doesn't seem unrealistic to me. The NASDAQ broke some important resistance, but then got punched back down in. So I'm looking at the S&P as still the laggard, definitely relative to the NASDAQ. And if it can't get back above this 415, 416 level, then I think we're going to need a little bit more time to digest things. But there's always opportunities out there, in particular for day traders and certainly for swing traders as well.
It's an impressive move overall as far as tech specifically, and we'll get back into that in a second here. But coming off what happened last year specifically with crude oil, I mean, the Ukraine-Russia situation kicked off that monster move higher. We give basically all of that back and then some as we head into 2023 here. As far as anyone who's maybe focused on the energy market, futures, if you want to have a look at it, or individual energy stocks, give us your overview here of where we're at as far as energy is concerned.
Let me take a look here. We can look at the crude oil chart, and there's a number of anchored volume-weighted average price levels I have on here. This green one is off the 2020 low. And you can see the market's been trying to find buyers in this general area for the last 3 or 4 months. So, that's 68 to 70 basically. Now we've just rallied up to the anchor from that prior low. So I'm looking at this as, this has been an important level. I think we're kind of stuck in a range here. And as far as crude oil goes, it's going to be maybe sticky in this area. I think this bigger range of 68 to even 84 is likely. I think we're going to just kind of stick basically between these two anchored VWAPs. So between 69 and 74 for the next couple weeks at least. And that's the way I always like to look at the market, is just little chunks at a time to see how it interacts with that bigger picture, where we're seeing a big compression of energy. It is going to take some time to resolve that.
Individual stocks have typically followed what we've seen as far as energy is concerned. You know, we've been discussing the Warren Buffett side of things as far as CVX is concerned, some of the positions that he has also in tech, obviously with Apple, but it's been just an absolutely crazy move across the board. We'll talk a little bit about some crazy moves specifically in regards to AI. Google getting in the race, the last one to kind of throw their hat in the race. You know, we have Microsoft, we have NVIDIA, who seems to have, you know, won this race so far as this year is concerned. As I said, I think it was 113% year to date as of Monday. We've all seen, you know, a bit of a pullback this week so far. But individually, if you go into the NASDAQ, is there one or two or maybe three names that you've pulled out and said, I want to focus on these, and if so, why?
I tend to be more of somebody who sticks away from the popular names. I find my edge personally is in swing trading. The names, you know, for instance, I just got stopped out of VRRM today. Here's a weekly and then daily chart. I also got stopped out of ARRY. Fortunately, I had, you know, purchased it over here, sold a third on that breakout, and then sold the balance here on a stop today. But I'm also long Mindy from a couple days ago and really ratcheting up my stops. And here at Monday.com, I call it Mindy, MNDY. But we're right now at the anchored volume weighted average price from the IPO. And you can see that the last time we touched, it was just perfect. And now we're extended into this area again. So it tells me, you know, this is where to tighten those stops dramatically. So I don't, you know, go back to your question, Brendan. I don't really focus so much on those, you know, bigger names as much. If I were to be trading, for instance, Apple, I think I would be in Sean's camp and, you know, be day trading it and, you know, looking at it as, you know, here's a strategy from the book. It rallies up to the prior day's VWAP, breaks below the VWAP for today, short here with a stop under there, and then manage your risk on the way down. That's my speed. It all depends on, you know, as you guys know, the personality of the trader and what they're looking for.
Yeah, I want to get into a few ideas here as far as how we can, as I said, incorporate this into our trading. First off, for anyone who may be hearing this term for the first time, for anyone who may be hearing this idea for the first time, what is VWAP? Specifically, and then what is anchored VWAP, and how are those two related?
Okay, we can leave this Apple chart up as an example. So the volume weighted average price is the average price that the stock traded at for every single transaction. It's a cumulative average throughout the day. So as you get this big first volume bar first thing in the morning, it's going to be very sensitive. Later in the day, when we have more denominators, basically more trades, it's going to slow down a little bit. But what we see is it acts as support or resistance often throughout the day. And there's reasons institutionally for that. So VWAP is for one day. It was created in 1988 as an execution benchmark tool. If we set the anchor, if we want to measure from anything other than the beginning of the day, for instance, such as yesterday, cumulative since yesterday, that's anchored to yesterday's open. If we wanted to anchor from this morning's midday low, you can see here that on this 1 minute chart, you know, we wouldn't know that that's the low, but maybe once it starts to rally a little bit over here, we say that was an important low. Let's set a VWAP there and start measuring it. And you can see how that becomes support several times in here. So it rallies from the volume weighted average price anchored to that low right into the VWAP for the day, reloads, gets some momentum. So, you know, even the super short-term traders can look at it like this and say, well, from that anchor, from that high right here, or from this high right here, where do the buyers regain control? Where do we know with conviction? Or vice versa, now that we know this was an important low, maybe we want to short right here with our stop above that level because it's below the volume weighted average price for the day. It's below this volume weighted average price, and perhaps it's in, and it's also breaking below this one. So right now, it looks like a good time for a short-term, very short-term scalper into the close, maybe to short this stock, short Apple.
If you're looking on an intraday time frame like that, I mean, I guess the key here is there's no right or wrong answer. As you said before, it's more about what is the personality of the individual trader, what is the style of the individual trader, and this is a tool to assist in that.
Yeah, so what it's telling us here, I should slow down and say that. So for instance, from this low right here, we saw a nice little rally developed. I mean, it went from 171 up to 170, 150. And from that low point, the buyers gained confidence as this happened. And then we saw now that it's below that anchor, that volume weighted average price at this point right here, what it says, the average long into this rally is now losing money at this point right here. The average short seller from there is now gaining money. We might also want to look at the anchor from the high, and I'll bet you that, and again, we can see if I, color this red, you can see that that anchor from the peak, found supply. It found, as long as that VWAP was still declining in here, it said the sellers are in control. And that's where this peak of this rally was found. And we're looking at a 1-minute chart because it's great to, make a real-time example. And I know a lot of your audience, will trade on this time frame, but the principles are applicable to every single time frame, and that's the beauty of it.
Lead into, I want to talk a little bit from a higher time frame. A lot of people, obviously, with investments, a lot of people looking at swing trades, as you were mentioning before. The principles, as you said, going to be very similar. But if you're looking on, say, a 2, 3, 5-day kind of time frame, maybe even out to a couple of weeks, where are the key pivots? Where are the key areas that you want to look for when it comes to anchoring VWAP?
Yeah, so we can look at this Monday.com again. And, I'm always aware of the anchored volume weighted average price from the IPO. And again, it often acts as resistance or from an important high. We saw that in DraftKings just recently, where you look at this daily chart and you see, well, what's going on here with DraftKings? Well, if we look at the anchor from this peak right here, or from this peak, most important, the all-time high, that this rally came right up to it. So first we saw, from important highs, this high, we saw resistance, and then we saw a battleground. It got back above that, and then it came right up to the anchor from this point. We saw that same thing happen in another stock that's been a big winner recently, GLBE. When you look at Global EE or online, you can see the anchor from that all-time high. That's exactly where we ran into supply. So when I look at things like that, I look at Monday and say, hey, we're right at this level. This is a potential level of resistance. So then I want to drill down to a shorter term time frame and look at it and say, okay, maybe on my final third, I'm going to set my stop under here real tight. Maybe it continues to move higher, but if I can continue to hold this with a stop against 164.10-ish, then perhaps it can continue to rally. So it's not only about the bigger time frame, it's about how they interact together with multiple time frame analysis and trend alignment.
It's such great content. As I was mentioning at the beginning, for anyone of any stage in their trading career.
Yeah. I had a quick question to ask you, Brian. And one of the things that we have a lot of new traders that are on board and watching us right now. Would there be a lesson, and you've talked about swing trading and day trading and some of the different styles, but you've been in the game quite a long time. I'm actually celebrating my 23rd year of sitting here on a prop floor. So it's been a lot of fun trading, and I absolutely love it. And we often on the show educate a lot of traders about some mistakes that maybe we've had in our early trading careers, or maybe even ones that we've done recently. Is there anything that you can really remember that maybe got you focused on VWAP, or maybe focused on technicals instead of maybe emotions or something like that? What was there one thing that said, oh man, this is what I want to follow and this is what I want to do?
Yeah, I think that the mistake, Sean, for me, early on was I started as a retail broker in Boston at Lehman Brothers, and there was always the aspect that there had to be a fundamental story to back up whatever you were pitching to clients. Fortunately for me, I worked for a guy who, initially as a cold caller and then as a lead qualifier, then an account opener and all that garbage, who would look at charts and he would look at them and back it up with a chart. Or a lot of times he would find a chart, a great looking chart, and kind of make up a story around it. Just or back it up with fundamentals he could point to. So, that gave me great training. But my biggest mistakes were always in believing something about a company and making that, my reason for being involved and thinking, well, the market's dumb for doing this, or, why can't just losing my objectivity based on news.
Right.
And I think that's the most important thing that really brought me to technical analysis to say, this is supply and demand. The market doesn't care about my opinion. I've tried to battle prices over and over again in my career, and it never works. So I bring up the chart of AI simply because I experienced this big rally and that news story that crushed it over here. I was aware of that story right in here. And I was thinking when it came out, well, that's already old news. So I tried buying the dip in here this day and quickly, thought I had it against a level that I thought was going to be support. Let's say it was this anchor price. So I bought a little bit, got out really quickly, got what I deserved. That is a loss. And then, my opinion of the stock was kind of tainted because now there's this news story that's making it happen. I couldn't look at it objectively when it broke, beyond this little consolidation. I didn't participate in this. In fact, one of my subscribers at Alpha Trends, asked me about it this day. He said, "What do you think, Brian?" I said, "Not for me. It could get going. You got that bad story about it out there." And my mind still got jaded because of this, because I was aware of this news story. And the bottom line is, if I wasn't aware of these news stories, I wouldn't have had the opinions that got in my way in this trade. So I do my best to protect myself as best as possible against listening to news and other opinions. I know that's a long-winded answer, Sean.
No, long-winded. I mean, you're with me here. I mean, I talk forever and been known to be quite long-winded, as you'll probably see right now. But no, the reason why I brought that up, Brian, is actually a great answer. It's almost like we talked before this, which we did not, was because today I had a very similar example with Netflix. I write a sticky note, which is every single day, some trade ideas with some. You're aware?
I'm aware. I see your sticky notes.
Okay. I like that. But what I was interested in was going against sometimes the trend of the market. And I think I have an example here. If you can come on here, Pratt, onto my screen with Netflix this afternoon, was I've been pretty bearish on this market for a little while now for various reasons. But Netflix was up today. Obviously, they have their own story. And then here it is. It's not a VWAP trade, so I apologize for this. But it did come all the way back into an area where I thought, and it even goes back to yesterday as well, some support into here. Well, yesterday was resistance, but we'll turn resistance into support when stuff like this happens. There it comes back in again. And despite me being short Apple, short Google right now, we're short Ford, short Nvidia today, I stood in the front of this move all the way to come down because I believed in support and resistance and in some levels, and we just cashed out at $3 right there on that trade. So sometimes, you got to stick your head out there and believe in what you see, and that's a perfect example. Your story about AI, I believe I heard you say something about that on another podcast with Mr. Downtown Josh Brown, and I feel like being biased into a name can hurt you, so you should always trust the numbers and trust what you see and don't try to overthink the market. And that's something for me, and I think that's something that you just mentioned as well as being very, very important lesson to learn. And the earlier you can learn that the market doesn't care about your position, the more profitable you'll be as a trader. So I think that's a very important point. And you make that very clear 100%. In your book. So, and I do want to say to everybody out there, just because you're on, it's not about peddling your book, but I was really, really interested in reading it, and to be completely honest, the examples in there, it's very straightforward. It's for beginning traders as well as traders like myself, because it's great to hear another side and a story about why technical analysis and certain indicators, especially just one of them, the VWAP with the anchor, is an absolutely great tool. So I want to thank you for that. The one quote that I'm never going to forget that you said in your book, I'm going to throw it back to Brendan right after this, was that you said a stock is guilty until proven innocent, and then innocent until proven guilty. And that means if you're under the VWAP, you're guilty until you bust through it. Then we can start to trade that to the long side and the other way around. So that to me really hit me down there. And my trading has definitely been improved by using such simple technical analysis like that. So thank you for making it simple for the common man like myself.
Fantastic, Sean. You're no common man. I think you're selling yourself a little bit short there.
Thank you, Brian.
All right, again, guys, highly recommend. Great read. Again, traders of any level, any skill level, any experience level will find value in this book. Brian Shannon, we appreciate your time. Come back whenever you please, my friend.
I'd love to. Thanks for having me on, Brendan.
Have a great day.
You too. Thank you.